The content that is going to be there in that intraday workshop is the basic candlesticks. What are candlesticks? And we are going to tell you how to understand a breakout and how to understand a reversal and how to tackle the fake breakouts and how to identify the fake breakouts and get into the genuine breakouts. That's going to be the day one. And second day, it is going to be our copyrighted strategies that we are going to discuss with you. That is intraday levels and critical levels. Intraday levels, especially for scalping, and critical levels are for day trading. And the third day, it is going to be the copyrighted trend line setup, the trend line strategy that we are going to discuss. The trend line strategy is one of the successful strategies that we have created and developed it. So we are going to give it to you in the workshop. We'll be explaining you the pros and cons and how do we need to enter into the market. What is the logic of entry, logic of stop loss, and logic of targets. Everything will be discussed. And finally, the fourth day, it is going to be a discussion day. Whatever we have discussed, everything will be discussed on the fourth day. If anybody is interested to join, the date is going to be June 3rd. The starting date is June 3rd. And make sure to join. Those who are interested, the fees is going to be 499. It's 499. That's it. And it's going to be a 4 days workshop. Those who are interested to join the workshop, you can give your names and numbers to us in the chat box so that our management team will save it and send you all the details regarding the workshop. So this is the update we have for you. If anybody is interested, you can do. If you can give your names and numbers so that our team management will get back to you. Is it clear, everybody? All right. Now, before entering into the session, I just wanted to let you know about something that in this meeting, we have two hosts. One is the management team host and I'm the co-host. My name is Suren Daniel. And if you want to send messages to me, you have to change the name to Suren Daniel and then you have to send it to me. If not, the messages can go to the management team. So that's the request I just wanted to tell you before we start the session, so that if you have any queries, you can ask me. If you don't change the name to me, then I can't see your messages. That's the only thing. So please change the name, the recipient name to Suren Daniel. That's my name. And then please send me the messages. Can everybody just try it? Everybody with yes, everybody. Yes. Change the name to my name and just say yes. I just want to see like everybody's understood that or not. All right. So you can either give your names and numbers to me or the management team, not a problem. We will be saving your numbers anyway. So not a problem at all. Okay. So I hope everybody is doing good. We will be discussing today about one of the most used indicator, that is moving averages, is what we are going to discuss today. Before that, I just want to show you how a moving average is constructed and what are the uses of moving averages and what is the benefit of the term called averaging. What do you mean by averaging? You can see that moving average. What do you mean by average? We will be looking at these things and then get into the setup, that is the moving averages. Okay. Now let me share my screen. Okay. Before we talk about the moving averages, just wanted to ask you one thing. Everybody knows that the market will start from what time to what time? I mean, the market starts at what time and market closes at what time? Can anybody tell me at what time the market will start, the Indian stock market, and what time it will be closed? 9:15 to 3:30, right? 9:15 to 3:30. But does anybody know what will happen from 9 o'clock to 9:07? There is a period called 9 o'clock to 9:07, there will be something happening in the market, but we can't have a control on it. What is that? Can anybody tell me what is that? 9 o'clock to 9:07. There is a pre-open market session will be going on. That is nothing but whatever the pending orders that were there, all the pending orders will be getting punched or triggered in the pre-open market, and then the market will open at 9:15. So, if you are holding any particular stock in buy, okay, you have bought one particular stock and holding that stock, what is the biggest nightmare that any trader would be, expecting? What is the biggest nightmare of any buyer who is holding the stock the before day? Anybody? What is the biggest nightmare for any trader to hold any stock in buying? What will happen tomorrow? That's the biggest fear. That is gap down. Yes or no? Everybody. If you are holding any stock, if there is any gap down, okay, if there is any huge gap down, that particular trader would be losing a lot of money, as you know, right? Just a second. Okay. Now, how did that particular opening price gap up or gap down or flat opening will be decided? Anybody know why that particular opening price will be at down or will be at upper side or will be exactly at the closing price? Mervin, you can text through the chat box, because if we allow mic, 100 people would be talking at the same time and it can't be a good idea. That's the reason we have not given anyone the permission to talk through the mic, because it's going to be chaos. Trust me. So let me tell you, the opening price, the pre-open market, after pre-open market is over, the opening price will be decided by the best average price, that is decided by number of buyers and number of sellers. They will be considering the best average price that is available after all the pending orders are triggered. Do you know this? Anybody? The opening price will be decided on number of buyers and number of sellers. They will take an accurate average value of number of buyers and number of sellers with the volume, and finally the opening price will be decided by the average value. In fact, I'll tell you one more thing. Let's say the current market price is at 400. Let's say one particular stock, the current market price is at 400. What does that mean? Do you mean that the buyers are exactly at 400? Or what is the price that is right now moving on? It is the accurate average value between the number of buyers orders and number of sellers orders. If you, whatever you see the current market price, it is the average value between the buyers and sellers. Is it clear, everybody? Everybody, did you understand what I'm trying to say? Whatever the current market price you see every single day, at every single minute, the price that you see in the chart is the accurate average value between the number of buyers and number of sellers. It's not big, the market will be falling because sellers are higher, but I understand that, but the price will be decided only by averaging concept. Thousands of traders would be buying the same stock and selling the same stock, but the price will remain same. I mean to say, there will be only one decided price at that right moment. At that point, you will be having only one price. You can't have 10 to 15 prices. That one particular price is nothing but the accurate average value between the number of buyers and sellers when compared with their volume. Is it clear, everybody? Is it clear? Now I'll tell you something, you might get a clear clarity about it. Let's say there was a candle here. Okay, let's say this is a green candle. Let's say this is a green candle and the high is 100. The low is, let's say, 50. What is the average value of this particular candle? What is the average value of this particular candle? Anybody? What is the average value for this particular candle? Come on, I'm expecting some serious, smart people in this group. Yes, right. 75 is the best average price of this candle. Okay. So let me draw a line exactly at the average line. Okay. Just a minute. Okay. Now, if the second candle opened is exactly touching my 75 level and closed above, what does that mean? In terms of sellers and buyers, just by looking at that candle, which is touching my 75 level, that is the average value, and closed above, what does that mean with respect to buyers and sellers? Like, who are dominating in the market? How can you say? What can you say about buyers and sellers? Who are dominating the market? Everybody. Buyers are dominating the market or sellers are dominating the market? Buyers are dominating. How did you know? Just by looking at two candles, nobody can know what is happening in the market. But if you understand the averaging concept, you will easily understand who are actually dominating the market from the first candle itself. From the first candle itself, you can say who are dominating the market. But that doesn't mean you have to take directly buy or sell. There are so many strategies that we have designed to when to take an entry, even after you confirm that buyers are dominating or sellers are dominating. But still, when it comes to the entry logic, you have a lot of things that will be involved. But just for analyzing the things, if you see this, I will be easily understanding one thing, that the buyers are dominating because they are above the average value of the range. Yes or no? They are above the average value of the whatever the range I have considered. They're above the average range. That is the reason buyers are dominating, is what I can confirm. Let's say the next candle, let's say the next candle closed like this. Okay. Now, can you tell me what's happening in the market? The third candle happened like this. What's happening in the market? Everybody. Buyers are dominating or sellers are dominating? We can't directly get into a confirmation that buyers are dominating or sellers are dominating, because the opening price is above the average and the closing price is below the average. That means both are equally fighting for the domination. That means it's more or less like a war between buyers and sellers every day. You need to understand this. Okay, it's more or less a war between buyers and sellers. That's what we will be understanding about the market. Now, looking at this candle, I cannot get into any kind of confirmation that this particular the sellers are dominating or buyers are dominating. Now, let's say the next candle appeared like this. What can I think about the market now? What can I think about the market? Who are dominating the market now? Now sellers are getting into domination, trying to reduce the buyers' domination, and they are getting into the market. Now, the final confirmation I will be taking is, if this range is broken, my low range is broken, I will be surely confirming that the market is completely dominated by the sellers, because the range itself is broken. Not only the average, but the range itself is broken. I can come to a confirmation that the sellers are really dominating in this market. So have we used any kind of indicator to understand who are dominating? MACD, RSI, stochastics. Have we used anything here? Yes or no? Have we used anything to confirm the domination of buyers or sellers? We are just using the averaging concept, just an averaging concept, to get into a pure analysis using price action. This is what the beauty of averaging concept. So there are three strong average values that you need to focus on. There are three strong values when it comes to any price action. One is the 50 level. That is, if you get the high and low, so let me show you, then you will understand. After this, we will get into the moving averages. Don't worry. First, you need to understand the averaging concept. Then only you will understand the moving average. Now, this is the high and this is the low. And let's say high percentage is 100 percentage of the value, and low is 0 percentage. So what will be my average percentage now? What will be my average percentage? If high is 100%, low is 0%, what will be my average percent? 50% is what you need to focus. If you are an intraday trader, try to find where is my 50 level. The 50 level itself is enough for you if you have a proper understanding of candlesticks and proper understanding of how to identify a good breakout. This one particular line is enough for you to make consistent profits every single day. So please focus on these three numbers from here on: 100, 50 and 0. 100, 50 and 0. That is, whatever the range you take. I don't know whether you take first 5 minutes candle range or 15 minutes candle range or 30 minutes candle range. That's completely your wish, because the time frame depends upon the style of a trader. It's not, universal. Anybody can use any kind of time frame. But I personally use 5 minutes time frame because it is not too much faster. At the same time, it is not too much slower. So if you take 1 minute time frame, the noise will be very high. If you consider 15 minutes or 30 minutes, you might miss a really good opportunity in the beginning itself. So I generally prefer 5 minutes. So what is my understanding is 50. Okay. One more level. Minus 50. That means below the 0 level. So whatever the range you have here, whatever the range you got here, that means from 50 level to low, that range you can draw one more level. That is minus 50 level. Okay. And on the above side, what will be the above side average value? 50 minus 50 on the above side. Can you tell me what will be the above average value that you need to focus on? Everybody. 50 minus 50 on the above side, it's going to be 150. That means from 100, draw the 50 level, one more 50 level. Okay. 150 level. Now trust me on this particular concept of averaging concept, 150, 50 and 50. If 150 is crossed, that you can confirm that the buyers are going to dominate the market for sure. Majority of the times, if the market comes back, nobody can help. But that is the main confirmation for me that that particular 150 level is crossed. Buyers are stronger, like completely dominating the market. If the minus 50 level is crossed, you can confirm that the sellers are very, very stronger. Simple. If at all market is ranging between 150 to minus 50, what does that mean? If the candles are ranging between 150 level and minus 50, what does that mean? Both are equally fighting for the domination, and there is no chance for you to take any entry. There is no chance for you to take any entry. This is what the averaging concept that I have created personally. Okay, this is what I generally use for equity. If I want to trade with equity, this is the number one setup that I use. I don't use any other indicators. Okay, because averaging concept is the most powerful concept that you can ever get. If you don't believe me, let me show you one thing. That have you ever seen NSE, particularly NSE or BSE, encouraging anybody to use any indicator? Have you ever seen NSE or BSE encouraging anybody to use any kind of indicator? Yes or no? Simple. Any NSE member in any news, have you ever seen NSE talking about any particular indicator to be used? Because this is very, very good. But NSE will give you the information of only one indicator that is available in this particular broker, that is VWAP. Anybody know VWAP? VWAP, volume weighted average price. That is directly loaded in the NSE website. If you want, I will show you. Can you see this value? What is this value here? Everybody, what is this value? Can you just read it? What is the value that is over there? What is the name of that value? What is the name of the value? So NSE encourages any trader to use only VWAP because it uses the averaging concept. That is VWAP, volume weighted average price, is the only indicator that NSE would be encouraging the traders to use, nothing else, because averaging concept is such powerful level to see and observe about it. Okay, so let's get into the moving averages now. Everybody understood the averaging concept? Everybody understood the averaging concept? Okay, I'll tell you one more last example before we get into the moving averages. Let's say this is your 150 level. This is a 50 level. How did we get these values? After you know the high and low only. After you know the high and low, then only you can draw these levels. Okay. Once you get the first candle of the day, that is 9:15 candle, you will get high and low. To calculate the 50, you need to do high plus low by 2, you will get 50 value. That particular 50 value, if you add for the 100, you will get 150. If you subtract from the low, you will get -50. Simple. Now I'll tell you something. These average values will act as magnets. Everybody listen very, very carefully. This is a really, really important concept. This average values will act as a magnets, the price magnets. If the buyers want to reach on the above side, the first point or the first hub or the first stop, the price will be stopping is at 150. If it wants to go directly upper side, it will go and stop at 150 no matter what. If you want, you can check. It should stop at 150. That is the rule of averaging concept. Once 150 is reached, okay, once 150 level is reached, then buyers and sellers will again discuss who are dominating in the market. If buyers are weak after reaching 150, if profit bookings are happening and sellers are getting into the market, there is no other way the sellers should bring back to 50 level. No other way. If buyers are there, they will try to move up. But if there is no buyers left, it should come back to 50 level. So this is one opportunity you can use, and this is one opportunity you can use for buy and sell. Now, after reaching 50, again, buyers and sellers will be discussing about the market, who are dominating the market. If buyers are dominating, again, they will try to go to the next hub, that is 150 level. If sellers are not ready to give up, they will try to bring it down. And if they are more dominating, if they want to prove their dominance, they will bring it back to -50 level also. And here the sellers are very, very strong. If the sellers are consistently increasing, it will break the -50 level and the market will go much more on the upper side. Now, I'll tell you something. Whenever you see that the market is trying to be a range bound or sideways, you need to understand that the market is in between that 150 level and -50 level. The buyers and sellers are trying to show their dominance, but nobody is trying to prove their dominance by any way. The only thing they are doing is they are just trying to show who are dominant in the market, but nothing is working from both the sides, and hence the whole day market will be sideways. If the market is trending, that means starting from the beginning itself, the buyers will be showing their power and they will break the 150 very easily. They will break the 150 level very easily and they will move up. If sellers are dominating in from the beginning itself, they won't even care about minus 50 level. They will just bring it down. So if the market is in the range, this is a perfect opportunity for a scalper. This is a perfect opportunity for a scalper. If the market breaks the 150 level, this is a perfect opportunity for a day trader buyer. And if the market breaks minus 50 level, it's a perfect opportunity for a day trading seller. This is how the setup has been created. Okay. Yeah, let me show you. So let's get into the real topic. The original topic that we have thought to discuss today is moving averages. Now I'll tell you how a moving average will be constructed. Then we will get into moving averages. Now let's say this is the first candle. Okay. Guys, I got a message from the management team that if anybody is interested to join the upcoming workshop, you can give your numbers right now. I'll continue the session, but meanwhile, if you're interested, you can give your numbers meanwhile, and I will be continuing the session. Now, let's say this is one candle I got. Okay. Now, this is the average point that I will be holding. Okay, this is the averaging point. This is the average value. Now, let's say I got second candle here. For the second candle, do you think the average value will be here or here? Now tell me, the average value has been changed or not? Let's say the third candle here. For this candle, the average value has been changed or not? For each individual candle, there is an individual averaging point. Yes or no? Now, if you connect all these average points, you will be getting a line. Yes or no? You will be getting a line if you connect all the average points of each individual candle. Yes or no? Yes or no? So that particular dotted line, a connected line of all the average points, is nothing but a moving average line. Is it clear? Whatever the average points that you are getting from each and every candle, if we connect all the dots together, you will get a line. That particular line is called moving average line. Okay. So this is the important thing. So here you have so many moving averages. You can construct a moving average with the average prices of high prices, average prices of low, and average prices of opening price and average prices of closing price. But majority of the famous traders or a good analyst of India or whatever it is, majority of the people would be suggesting us to use closing price as an average value, not high, not low, not open, but a closing price, because it will give you much more accuracy for understanding the trend of the market. I'll tell you simple thing how a moving average will be helping us. Let's say this is a moving average for you. Okay, simple. This one line can decide or divide our trades into two parts. That is, on the above side of moving average, this is our buy zone. What is this zone called as? On the above side of the moving average, what is this zone called as? On the above side of moving average, what is that zone called as? Everybody. It's a buy zone. That means if the price is above the moving average, whatever the moving average you are using, I'm not sure. But if the price is above the moving average, you should buy. You should not sell. Simple. Because it is always tries to come back and go. Because As I told you, the averaging value is like a magnet. It will try to pull it down as many times as possible. So never ever take a sell if the price is above. Yes, Ramanjan, we will be explaining. I'll give you all the I'll revise everything by end of the session, but let me continue because time constraints and all. We have only 1 hour, but definitely I will summarize everything. Okay. Now, if the price is below the level, I mean, if the price is below the moving average, what zone it is? What zone it is? Everybody. It is a sell zone. Simple. Okay. So this is what you need to understand before we get into the moving average. Moving average can act as a resistance. Moving average can act as a support. Moving average can act as a trend line. It is a multi-talented indicator, I would say. I don't know why this is included in an indicator, but this is not an indicator. It is a price action tool. Unfortunately, it got added into the indicators, but it is not an indicator. It is a price action tool for me. So generally, I don't encourage indicators, but this is one of the indicators that I would be asking any student to use, because this is not a typical indicator like, it will be giving you signals. It won't give you any signal. It will show you accurate understanding of who is dominating the market. So that is the reason moving averages is one of the important price action tools that you need to master. Now, the first important moving average that everybody should know about is 200 moving average. Okay, one of the most important moving averages. I'll tell you, Arun. We'll get into the time frame because time frame is related to the strategy. Okay, I'm not here to. I'm not explaining any strategy. I'm just explaining about the moving averages. So the time frame comes when we talk about the strategy, but I'm not talking about the strategy. I'm just explaining what is the importance of moving average. Okay. Anyways, the first moving average we are going to use is 200 moving average, a simple moving average, no other complications. SMA, a simple moving average. If you click on moving average, the period you can change it to 200. And if you can see the field, you can have high, close, low, high, low by 2, high, low by 3. You have so many things here, but the basic default one it will be available to you is close. So don't change anything. And the simple moving average. 200 simple moving average is nothing but this is the line that has been created using past 200 trading sessions average values. Past 200 trading sessions average values. Is it clear? Last 200 sessions average value it has taken. That means it is going to give you the overall trend of the stock. 200 moving average is candle time frame. You can use 5 minutes, guys. Okay, generally for a day trading purpose, you can use 5 minutes time frame. Okay, and understand one thing: 200 moving average will give you the overall trend of the stock. Now, let's say I want to choose a stock for investment. That means I want to hold it for a while. The first important, not investment, maybe the positional trading. Let's say I want to hold it for months or days. The first important thing that I have to be using is 200 moving average. Now, the position of the closing price, if it is above my 200 moving average, I'll be more than happy to take that for a trade. That means onto the buyer side. Now, let's see how a moving average will behave. If you can see, this is the relationship between the price and the moving average. If the price is above 200 moving average, that means it is a very good stock for a buying position. Very, very good stock for a buying position. If at all you want to invest in any stock, if that price is below the 200 moving average, wait until the price gets above the 200 moving average. Now, one important factor, or if I can say one important feature of 200 moving average, the relationship between the price and 200 moving averages, the price will be scared by 200 moving average. The price will never stay with 200 moving average more than half an hour or 1 hour. Hardly half an hour it will stay. But sometimes the moment it touches, it will move. That means 200 moving average will act as not as a magnet, but it will act as a repeller. That means it won't allow the price to stay near it for a long time. That means whenever the price is reaching 200 moving average, immediately it will throw away the price. Immediately it will throw away price most of the times. Let me show you a few examples. Then you will understand what I'm talking about. Yes. See here, this is a Nifty Bank. If you can see here, the market wants to move up. Okay, the market wants to move up, but it tried to go above 200 moving average, but 200 moving average was not in a position to allow the price on the above side. It will immediately repel it. That means the throwing power of 200 moving average is very, very powerful. This is where any trader should start trading and booking their profits. Whenever the price is nearby 200 moving average, make sure that it is a very good opportunity for you to take a sell or buy depending upon which side it is reacting. Let me show you one more thing. Just a second. You can see here also. The price is trying to stay near 200 moving average, and you can see the throwing power of 200 moving average. It will throw very, very fast. So whenever you see the market is running very faster, you need to understand there is a hand behind it, that is 200 moving average. 200 moving average is the culprit behind that faster movement. So whenever the price reaches the 200 moving average line, the price will be thrown away very, very faster. So this is one of the opportunities you need to keep in your mind before you trade. But 200 moving average alone can't help you to take trades in a positional way. You need one more moving average with the combination of 200 moving average is 50 moving average. 50 moving average, that means the average closing prices of past 50 days, 50 trading sessions is what we are going to take. So let me open 50 moving average as well. Let me take some other color. Let me take 50 moving average as green. Okay. The green is 50 moving average, red is 200 moving average. Now, important thing that you need to understand, how do I need to use 50 moving average and 20 moving average for a positional traders? First important rule, if the price is above 50 moving average and 50 moving average is above 200 moving average, this is the sequence: price, 50 moving average and 200 moving average. If this is the scenario, if this is the combination that you see, it is a very, very good opportunity for anybody to take a buy. Let me show you. You can see 200 moving average has been crossed and market went up. And after that, you got a perfect combination of price. Price is above, 50 moving average is on the below side, and 200 moving average on the lower side. This is a perfect combination for you to understand that this is going to be a very good opportunity for us to buy. But this is not a good example, because if the market starts from here, maybe you can take, but if the market is almost above the 50 moving average and you don't want to take, because the market may come back, touch 50 moving average, and then it can move. So wait until you get a breakout from 50 moving average and make sure that 200 moving average is below side. So let me show you that combination for buying side. Okay, from here, if you can see, yeah, from here on 22nd of not here, maybe here, yes. If you can see on 23rd, market is taking a reversal from 50 moving average, a good point, 50 moving average on the below side, and 200 moving average on the below side of the 50 moving average. This is a very good opportunity for you to take a buy, and you can see market really went well. This is a day trading technique that you can use. So the stop loss that you can keep is any breakout candle low, nothing more than that, and you can take a trade. If not, if you want to trail your stop losses, wait until the price crosses on the below side of 50 moving average. If you want to wait until it reaches the peak point of profits, you can wait. But if you want to book your profits also, you can book. This is one of the ways that you can trade with 50 moving average and 20 moving average. This is one more example. You can see 200 moving average is below, 50 moving average is also below, and finally price has broke on the above side. So this is also one of the good combinations that you can use for buying side. Now let me show you on the selling side. You can use EMA and DMA also, but let's not complicate things. You can use simple moving average, that's fine, because simple moving average is really works well. Now you can see market is trying to take reversals from 200 moving average, and still I'm not convinced, because it is that 50 moving average is above the 200 moving average, so I'll be waiting. Where I'll be taking is the moment the market reaches 50 moving average and it starts falling, and I can see the combination of 200 moving average and 50 moving average, and finally price is falling. This is where we can book your profits. The stop loss is any particular candle. You can take a level above the 50 moving average. That would be an accurate stop loss. If the market starts from 50 moving average is what you think, you can take a stop loss below the 50 moving average for the buying side, above the 50 moving average for the selling side. Is it clear, Varun? Now, at what situations I should not take? At what situations I should not take any entry using 250 is if the price is getting sandwiched between 250, you should not enter. Now let me tell you in other way around. This is a no trading zone. Simple. This is a no trading zone. If the price is in between two moving averages, nobody should take a trade. Simple. Is it clear? Is it clear? Nobody should take a trade if the price is in between two moving averages, whether it is 200 above or 50 below, doesn't matter. But if the price is getting sandwiched between two moving averages, above 200 and below 50, or whatever may be the combination, price should be always on the above side, or price should be always on the below side, but the price should be not in between. Price should not be in between. That means the market is in a confused state. That means in intraday, the market is trying to move up, but on a bigger basis, market may be moving on the downward side. That is the reason price is in a confused state. That's where the price will be in between two moving averages, and you should completely avoid trading when the price is in between two moving averages. Is it clear? Second thing. Now, I hope everybody would be knowing this golden cross, right? 50 crossing 200. That's where, you would be listening this so many times in the YouTube by so many traders saying that, if the 50 crosses the golden cross, forget about all these things. Let me tell you, that is a very, very a confused concept, let me tell you, don't use it. Wait until the price crosses 50 moving average and understand that 50 is on the below side and 200 is below the 50. 200 is below the 50. That's the combination. That's it. You can take an entry, because as I told you, the throwing power of 200 moving average is very strong. Now, understand one more thing. If the moving averages are straight like this, like parallel lines, you should not take entry. Make sure the moving average is either on the upper inclination or lower inclination. You should not take an entry if the moving averages are straight. Is it clear, everybody? Nobody should take an entry if the moving averages are going straight, like a resistance level or a support level. You should not take any entry. Yes, you have to check the candlestick pattern as well. That means wait for any hammer candlesticks, because if the moving averages are straight, that means what is the trend? Mervin, the question asked by you, I'll try to answer you only. If the moving averages are trying to be straight, what does that mean about the trend? What does that mean about the trend? Sideways. Yes or no? So what will you be taking entry if the market is sideways? Do you think it's a it's a good time to take an entry? No. That is the reason, wait until the market gives you an inclination on the 50 and 200. Okay. Then it will be a perfect opportunity for you to take entry. Now you can see here. So here all market is very clumsy since a long time. Now this is a very good opportunity. This is what I'm talking about. Now you can see 200 is on the above side, 50 on the middle, and price is on the bottom. And you can see market is taking reversal, and it's a perfect opportunity for you to take an entry. Simple. Okay. So this is one of the ways you can use 250 moving average for you to take trades. Is it clear, everybody? Is it clear how to use 250 moving averages? Anybody have any doubts, please let me know. After that, I will show you the scalping setup as well. This is a day trading setup. We will be using 50 and 200. For scalping, we won't be using 250. We'll be using a different combination, which I'm going to tell you. Before I start the scalping setup, before I start the scalping setup, can you just tell me if you are clear with this, or do you have any other questions? Just let me know. See, few people are asking, where should I take entry? Where should I take the exit? See, I'm telling you something. I'm not telling you any strategy, guys. I'm telling you the importance of moving average and when we need to take a trade. That's what I'm telling you. See, when it comes to the strategy, then I'll explain you like where should be the proper entry, or where should be the the stop loss and the targets. The strategy is not that easy. Strategy is a very, very difficult task. You need to understand what is the scalability of the strategy, which risk to reward it is giving you, and a lot of things are involved. Okay. Okay. Now, let me show you the scalping setup now. Okay. So which time frame generally used for scalping? Which time frame do you use for scalping? Anybody? Which time frame you generally use for scalping? Scalping, guys, 5 minutes is for day trading. Scalping means quick entry and quick profit booking. You have to do. For that you need either 1 minute time frame or 3 minutes time frame. So let us go with 1 minute time frame and show you some good understanding with moving averages. So in scalping, when it comes to scalping, the best moving averages that you can use, the combination that you can use is 20 moving average and 50 moving average. The 50 is common because it's the all-time favorite for all the time frames. 50 moving average and 20 moving average is what we are going to use. 50. So let the 50 be red and let the 20 be green. Let me change it to green. Okay. Now, same rules. Rules are same, but you need to understand one concept when you are using 20 moving average or when you're using 20 and 50 moving average. The most suitable setup for you to use 20 and 50 is called railway track concept. What is that? Please repeat it with me. What is that called as? Railway track concept. Okay. What do you mean by railway track concept is if 20 moving average and 50 moving average are traveling in a parallel way, whether it is on the upper side or seller side, you need to understand that the trend is really strong. You can use this in 5 minutes also, not a problem, but I'm just telling you the concept here. The railway track concept is nothing but whenever you see 20 moving average is on the above side, 20 and 50 are moving in a parallel way. They are not, trying to entangle with each other. They are not able to touch with each other and moving in a very smooth way. That means the trend is going to be very strong, whether it is a bullish trend or bearish trend. So let me show you the railway track concept. Now, can you see here the 20 moving average and 50 moving average are touching anyway? Can you see 20 moving and 50 are touching at any point of time? Yes or no? Here in this particular chart, can you see 20 and 50 are touching anyway? No, they are moving in a very parallel way. That is the reason the trend is very high. Okay, trend is very strong. Okay, let me show you here also. You can see the trend. Here also you can see the trend is going in a railway track way, in a parallel way. That means the trend is going to be good. Same rules that you have to apply here also. That is, if the price is above 20 moving average and 20 moving average is above 50 moving average, if this is the combination for scalping, you can take a good trades in scalping as well. What do you mean by scalping? So many people are asking what is scalping. Scalping is nothing but taking an entry in a shorter time frame and booking your profits in a very short span of time, within 3 minutes, 4 minutes, 5 minutes. Sometimes people take trades within seconds also, depending upon the momentum, but it will end between 5 minutes to 10 minutes range. You can take trades. For day trading, you should wait for hours and hours to get your targets, but when it comes to scalping, it will be very easy. Now, understand one thing here, guys. See, this is what I've been talking about. You can see a railway track concept. So whenever you see there is a very good space between 20 moving average and 50 moving average, and they are trying to be in a parallel way. And at that point, if you get any reversal from 20 moving average, let me zoom in and I'll show you. Let me zoom in. Let's see here. This is the place where you can take entry because all these candles are touching my level and closed above. That means all these are on the buyer zone. So once you get a proper confirmation, okay, whether it is breakout candle or any confirmation you get as per your strategy, you can enter here, somewhere here, and you keep the stop loss below the 20 moving average and wait until the price closes below the 20 moving average again. Until then, you can trail your stop loss. That's one important thing. If not, if you really have any target of 1:1 or 1:2, you can book your profits. That's second important thing. Okay, this is what you need to do for scalping with 20 moving average and 50 moving average. If you can see here also, this is a very small trade we got. That is, here the reversal happened and you got the confirmation, and the 20 moving average is here and 50 moving average is here. They are not even touching way, and the space is very high. So if you can take entry, you will be booking your profits. But if you wait until the market closes above, maybe you can close at that point also. It's all about your style of trading. Whether you have any particular target, wait for the target, or you can trail your stop losses as well. Let me show you a few more things before we close the session for the day. As I told you, if the price is in between these, that means the market is trying to market is actually in a confused state. Don't enter into the market. Now this is a very good opportunity for me. If you can see, the 20 moving average is below and the 50 moving average on the above side, and you really got some good breakout and confirmation as well. And if you enter here, this is going to be a really good trade, to be frank. Until here you can be waiting, or you can book at any point of time you want. Let me show you a few more things. Now, as I already told you, if the moving averages are straight, what you have to do? If the moving averages are in a straight line, like a resistance and support, what we have to do? If the moving averages are in a straight line, what we have to do? Anybody? What we have to do if the moving averages are in the straight line? You have to stay away. Simple. No entry at all. Okay. And I think I'm getting a good opportunity here. Because the market is trying to go in a parallel way, and I think I'm getting some good profits, good trades as well. Let's see if the market is moving up. So until market has reached here, okay, the market has reached till here, and again the market started falling. Even here also the market has fallen. So the market tried to move up, but the price tried to come down. Now let's see on the lower side, are we getting any good trades? Yes, this is a very good opportunity. As you can see, the market is trying to take, this is a very good candlestick pattern that you need to observe. This is called a reverse hammer actually. Okay. This is it's kind of a spinning top, and this is a good rejection candle that you got, and a good strong sell candle. So if you got entry here, then it is going to be a very good trade. And if you can see on the lower side, it went until here before it took a reversal. Now after that, I think market has closed here. That's okay. Okay. Very good. So I think we are done with the day trading and the day trading and the scalping as well. So let me show you how to take any positional way. If you want to take any positional trade, I would say go with 15 minutes. That would give you a better idea. At the same time, the moving averages that you can use is 50 and 200. Same, 50 and 200 are the best moving averages for positional as well, but use 15 minutes time frame. That's what I'm telling you. So take 50 is red, and 200 is going to be green. Take 15 minutes. Okay. So let's see on a bigger time frame how it is working and all. Now, whenever you get any entry on the lower side, so you can see you got a really good entry at these points where The market is below the 50 moving average and 200 moving average on the below side, on the above side. So this is a very good opportunity for you to book your, carry your selling trade. That is, if you are taking any optional trade or if you are taking any futures trade, then it is going to be a very good positional trade because the market has fallen down as per our combination. That is, below, the price is below, price is below the 50 moving average and 50 is below the 200 moving average. This is the combination which we have been talking about. Now after that, let's see any buying scenario here. This is a very good scenario I can see here. This is the spot where I think we got a good opportunity where the price is above the moving 50 moving and the 200 moving averages on the below side. So you can see the market went till here. Okay, so this is one good opportunity you got, as not only in Nifty Bank or not, you can use this as in any time frame. Now this is where you need to avoid your trades. As I said, this is the place where you need to avoid trades because the market is completely sideways. And can you tell me this setup is beneficial to which kind of traders? This particular sideways setup is beneficial to which traders? Equity traders, future traders, or option traders? Everybody. This particular sideways scenario where the moving average is completely straight, which this is beneficial to whom? This is beneficial to option sellers because they will be getting DK from both the sides. Okay, from both call side and put side, they will be making more money. In fact, I made a lot of money here on the May month. So right now I am doing the, just a second, let me show you if I can. I don't know if I can show you now. Anyways, I'll be showing you again because it's logged in. So I have started the June series options and I'm trading right now and it's going really well. And one more thing I just want, yes, this is a very good opportunity. You can see here, this is a very, very good opportunity for buying where from here, this is a good opportunity because the price is breaking 50 moving average and the 200 moving average on the below side. And you can see until May end, market is completely moving up. It is trying to take the support from 50 moving average, which is, this is a really good news for any banking sector traders that Nifty Bank is still supporting by 50 moving average. It didn't even come till 200 moving. 50 itself is supporting. That means buyers are very, very strong. If sellers are getting into the picture, it may cross 50 moving average and come down. Then it is one more, there is one more barrier that the seller should cross, that is 200. If 200 is also crossed, then you need to wait for the combination, that is 50 coming below the 200 and price is coming below the 50, then you can take a selling side. So this is the overall understanding of day trading concept, intraday concept, and positional trading concept. Is it clear? Is it clear, everybody? Now, I think, okay, we are almost done with the time, but if you have 5 more minutes or 10 more minutes, I'll show you how to draw the 150 level, 50 level, and minus 50 level. Do you guys have time? Do you guys have time? Can I continue this? How to draw the 50 level, 150 level, and minus 50 level? Thank you. So let me show, this is the final thing before we close the session, and we will have some discussions now. After that, we'll close the session. But anyways, let me get into the 5 minutes time frame. Okay. Now, can you tell me what is the high of the Nifty high? This is the 5 minutes, first 5 minutes high, and this is first 5 minutes low. Can you tell me what is the high and low of first 5 minutes candle? I have just drawn. Can you just tell me? Can you just repeat it to me? Can you just repeat what is high and what is low here for the first 5 minutes candle? $35,429 is the high and 32,275 is the low. So high plus low by 2. Can you just do high plus low by 2 and tell me the value? High plus low by 2. 35,275. Thank you. I'm sorry. No. 35,429 plus 35,275 divided by 2 will be the average value between high and low. Can you just tell me what is the average value now? Everybody? 30,000, oops, 35,429 plus 35,275 divided by 2. 35,352. Okay. This is the average value of high and low. Okay. This is the average value, that is the middle line, 35,352. Now, if you can see, how many points difference do I have from the average value and the low? How many points difference do I have between the average value and the low price? 35,352 minus 35,275, 77. You need to subtract that same 77 on the lower side. Can you subtract 35,275 minus 77? 35,198. So let me remove 35,198. Okay, thank you. Okay. So on the above side also 35,429 plus 77, if I can take 35,429 plus 77 will be 35,506. Okay, so I'm just removing the high and lows. So these are the 50, 150 and minus 50 levels. Is it clear? 50, 150 and minus 50. Did you understand, everybody? These three levels are very, very powerful levels for your entries when you are doing with these. Okay, 50, 150 and minus 50. So whenever you get any reversal from any level, so if you are a day trader, okay, make sure the price crosses the above line and take a buy. If you get on the lower side, make sure you will take a selling side. So that's what happened here. If you can observe here, that is what happened here. You can see the market went up, took a break, and finally the market has fell down. Of course, it came down again, it went up again. So if you can draw one more level, that is maybe 200 level, you might be getting one more level. Okay, so that is the reason market is actually taking a reversal from one more 50 level. That is the reason the market is actually taking a reversal there. So as I said, the price will take a halt at every breaking point. Okay, so it's not exactly related with Fibonacci. Fibonacci levels are different, but this is the most common values, that is 50, 150 and minus 50. Fibonacci levels are little different, but it's more or less it's nearby the Fibonacci. Okay, now let me tell you, if this is the best, if you want to do this in scalping, okay, if you want to do this in scalping, any level is your entry point. Any level, whether it is the middle line or top line or bottom line, any level is your entry point. If you can see here, this is one entry. Okay, this is one entry and target reached. After that, the market almost went till the 50, but the sellers were very strong and it came down. After that, if you can see, you got one more opportunity here. It got a sell, market came down. And again, it went exactly to the -50 level and it's fallen down. And again, the market became sideways after that. But oops, 1 second. 1 second, guys. So again, the market went up, and again you got an opportunity to take a sell here. The market has fallen. So in this way, you will get opportunities every single day. Okay. Um, can I draw these levels using Fibonacci? Yes, you can draw these levels using Fibonacci. I'll just give you a brief about the Fibonacci before we close the session. So let me show you the before day, because before day, I think the market worked really well. I think these are the levels. Yes. So this is the Fibonacci, and this is the 50 level, and this is the 150 level. Sorry, -50 level, and this is the 50 level. You can see market is completely range bound between 150 level, 50 level, and -50 level. If you can see, the market reached -50 level and took a reversal. The market reached 150 level and took a reversal. Market reached 150 level 2 times before it completely fallen and came back to the 50 level again. This is how the 150 level, 50 level, and -50 level will help you every single day. So please make sure to use moving averages for a different style of trading, and this 150, 50, and -50 levels for different style of. This is the horizontal level of trading. It won't see any trend. You don't see any trend using the horizontal levels, but moving averages, you see the trend, everything. That's a different style of trading. So these are two unique ways of trading. Is it clear, everybody? Is it clear? Now, if you want to learn more things about the intraday levels, the critical levels, and the trend line setups, you can join our upcoming 4 days intraday workshop. It is going to be the 4 days, and the price is going to be 499. Okay, it's not 4,000, it's 400. 499 is the price. It's going to be a 4 days workshop. First day, it is going to be what is a green candle and what is a red candle, what is its significance, and I'm going to tell you how to understand a proper breakout. When do you take exactly an entry after you got a breakout, and the logic of entry, the logic of stop loss, and logic of targets will be told. And how to avoid fake breakouts is something which we are going to discuss in the first day. Second day, it's going to be purely strategies. Our copyrighted strategies like intraday setup, and I'm sorry, intraday levels and critical levels. Intraday levels for scalping and critical levels are for day trading. And the third day, it is going to be a breakout setup. It is called the basic trend line setup, is what we are going to explain. The basic trend line setup is for both intraday and positional as well. That's what we are going to discuss on the third day, and the fourth day is going to be a completely discussions. So if anybody is interested, you can give your names and numbers. We will be helping you out to give you all the details about the workshop to your phone number. Once you give your phone number, if you're really interested, you can give your numbers so that we can contact you back. Is there anybody who wants to join the intraday workshop? Anybody from the group? So I'll be taking the mentorship, the workshop. Nobody else will be taking. I'll be the one who is joining the workshops, and you will be having a really good time. That's my what should I say? That's my word. I can say I can't give you any guarantee about that, because but still, trust me, you won't get disappointed. That's my confidence, I can tell you, because we have already finished the intraday workshop batch number 1. This is the second batch, and the first batch were really impressed, and they have joined the technical course as well. So we are looking forward to meet you all. So if anybody is interested, please make sure, feel free to give your numbers. We will save your numbers and we will contact you back. Anybody? We'll be waiting for almost what's the time now? We'll be waiting for 5 more minutes maybe. If anybody is still interested, don't forget to give your numbers before you leave. If you have some important works, you are free to leave, but before you leave, make sure to give your numbers if you're really interested. We getting back to you is really, really easy than you getting back to us, because you might be busy with your works. So don't, you don't need to struggle about that. We will come back to you. That's the thing. That's the, the great thing that we are, great help that we are going to help you. Okay. And please make sure to subscribe to our Telegram channel. We have sent, group has sent that Telegram channel, and we will be posting everyday bank nifty intraday levels and the trend line setups as well. So please make sure to give your numbers, and please make sure to click on that link to get into our public group. Okay. Yes, guys, we are getting your numbers. Sure, definitely, Marvin. We will be starting from very basics. See, the candlestick itself is a very basic thing. If I'm saying I'm going to start from the candlestick, you need to understand that it is going to be for the beginners, not expertise. Okay. Okay, guys. I think we got our numbers, and if anybody else who didn't give your numbers, you can give us right now. If not, you're free to leave. Thank you so much for your time, and I hope everybody enjoyed the class. We thought to have a 1 hour class, but it went till 1.5 hours. But still, that's totally fine. I've really enjoyed, and thank you, guys. Thank you so much for your time. Thank you, Shankar. Thank you, Arun. It's really good to have you guys in the meeting. I really enjoyed, and I didn't even see the time. It went beyond the 1 hour. Generally, the demo sessions will be nearby 1 hour, but it won't go beyond 1 hour. But this is a special one. Thank you so much, guys. And we have got your numbers, and definitely we will get back to you as soon as possible. Our team management will contact you and give you all the details. Yes, I talk Hindi, but I don't teach in Hindi. That's the problem. See, the point here is, we have students from all around the country, so I can't concentrate on Hindi. That's the only one thing. But still, we are working out on that Hindi part, because we are planning for exclusively Hindi classes as well. Definitely, I won't be there in that class, but definitely we will be having a very well-deserved trainer who can talk Hindi fluently than me, because I belong from South, so you can't expect a fluent Hindi from me. Thank you, guys. Thank you so much. I can try Soham. I can try talking in Hindi, but the thing is, I don't know if everybody is comfortable with Hindi or not, but I can try. Okay. So thank you so much, guys. We are done with the session today, and looking forward to meet you all in the next session. I mean, the workshop that is going to be held on June 3rd. It's going to be a 4 days workshop. No, the recordings will not be provided to your mobiles. The recordings will be available in our app. Dear management, can you just send the application link to the group? A few people are asking for the recordings. Guys, this is the link for our Addhyann Institute of Finance application. You can go through and log in yourself and check all the demo sessions for free. Okay. If you want the technical course sessions, you got to pay, but recording sessions are free. Don't worry. Okay. So that's it, guys. Thank you so much for your time. We'll meet again on next Saturday with a new concept. We are always be happy to share our knowledge with everybody who are interested to join and be the part of Addhyann. Thank you so much, and I'm signing off. Take care, guys. See you.